Good afternoon, everyone. Dr. K over here on this side of the pond, the west, or rather the east side of the pond, and Gil over on the west side of the pond, in fact on the west coast in Playa del Rey. And we've got some nice sunny skies with clouds interspersed because over here it likes to rain perpetually, even in the summer months. And I'm sure over in Playa it's quite sunny, as LA tends to be sunny perpetually throughout the year. Good thing I like rain. It seems that it's been raining over in the market with the correction that started in mid-May, and with the market going sideways and then breaking down through the 50-day moving average. However, with that kind of action, the market direction model found it best to go to a cash signal rather than a sell signal, simply because QE is in full force across all the major central banks, and we've seen situations where it looks like the market's going to split wide open, but it finds its footing and then it starts to baby step higher, and maybe even on lighter volume, but baby step nevertheless. So the model at this point sees it best to just sit in cash. We could see some volatility since the market jackknifed lower, and now it's doing a bounce, somewhat anemic, but again, with QE in full tilt, the markets could find their way higher. We see that gold and silver continue to make new lows. They're off quite a bit today once again. There's a lot of cross currents with these precious metals, so one could argue, well, maybe they're telegraphing that QE is going to end sooner than later, but it could also be Chinese influence. We know that the Chinese want to transition from U.S. Treasuries into other vehicles, such as precious metals, so that the cheaper they can buy their gold, the better off they are. And we do know that they're big enough to have manipulated the price of gold in various ways in recent memory. So it's better than trying to play a guessing game with these precious metals. It's just better to say, well, they're in a downtrend and there's not a whole lot to be done in those vehicles. Over in leading stocks, they continue to undergo corrections. We've seen the housing stocks get hit pretty hard. The industry group in housing has fallen from once upon a time being in the top 25 percentile. Now they're near the bottom 10 percentile. That also telegraphs that maybe housing not all as well in housing, not all as well in the economy, and as the economic reports roll out, we see that there's still mixed signals in terms of whether the economy is truly finding its footing or not. And so Bernanke's hands are tied, and he's got to keep QE on full in the meantime. And that meantime could last for a number of months. We could be sitting on full QE to the end of this year, and that's 6 months of quantitative easing, which in times past has propelled the markets higher. So as I wrote earlier, if we see this continuation of the uptrend, then history is just replaying what it's shown since 2009. However, if the market can't find its footing, if outside of crises out of Europe or China or somewhere in the world, if there's no discernible crisis situation and the market cannot find its footing in the face of full QE, that's telling us that QE doesn't have the effect. QE3 doesn't have the effect that QE1 and QE2 had. And of course, the model would take that into account and act accordingly. Gil? I can't hear you, Gil.
Oh, thank you. I got to put my microphone on. How's that? Everybody?
There you go.
Okay. My approach to the market right now is that on Monday, you were coming in over the weekend, and it looked to me like a pretty oversold condition. And so looking for a bounce on Monday, and it started out, during the day, things didn't really pan out in terms of an immediate bounce. It looked like we were going to break and just blow wide open. But once again, as has always or frequently happened throughout the last 4 or 5 years of QE, we got an oversold bounce. And it sort of makes sense. One of the things, though, I noticed is that you're not seeing sentiment in terms of the investment advisors, the AII, you're not seeing sentiment turning really bearish here. And if you turn on the TV for a little while, you notice most people are sort of poo-pooing the sell-off and that the market got it wrong and overdid it. I think what you're seeing here is this major gap down And this breakdown here, that's trouble, I think. And if the market is going to recover, I think it's going to need more time than just to come right back. And a lot of these patterns that you see are broken down. And you have stocks, most of the stocks trying to rally are stocks coming up off of extreme lows of their pattern. So what I'm watching for here is you got a gap. You get 1, 2, 3 days. I would call yesterday the first day of the rally. Now, this is color-coded red because it gapped up here and then closed just a little bit lower. So it actually closed lower than the gap up day. And I just have that there because it gives you sort of a candlestick sort of indicator where it'd be a negative candle because you open higher than you close. And so I just have it that way. Somebody asked a question as to whether you would use this to determine if a stock had a pocket pivot on a day when it was down, but no, we don't use that. If it's got to be up on the day for a pocket pivot to be valid. So I don't use these outside of having them on a few of my daily charts just to give me sort of a candlestick feel with what is otherwise a line chart for the most part, a bar chart. So anyway, so what I'm watching for here is you got this gap up trading. It looks like volume right now. How are you looking on the volume now? It's been petering out all day. So maybe you're running out of gas. So maybe you rally up towards the 50-day, and you might look for some resistance on the Nasdaq at least at say 33.90, 33.95, 3400, somewhere in there. And so what you're doing, or what I'm doing, is I'm watching stocks that are on my short sale target list as they're coming up, and I'm looking for spots to put them out. And so just give you a couple of examples today, and also get to to me this is a day trader's market, and I think you have to be open to maybe going long some things at the same time you're looking to be shorting things and not really looking at the market one way or another. In other words, trying to have a rigid view that, oh, we're in a downtrend, we're in an uptrend. I think the way this market trades is so erratic and so volatile that you can find spots to buy stocks for short-term trades, but in most cases I think that's all they are. So, some examples just real quick. Yesterday, let me get the Nasdaq chart out of the way here. Here we go. Yesterday you saw a pocket pivot on away. It was living under the 50-day, which is negative. But as soon as it pops above that 50-day and you see the volume picking up, I think something like that is viable. But you got to be quick on it, and it has to be on your watch list, and that's a possibility. Another stock that I picked up over the weekend had a pocket pivot on Friday. Right here is Splunk, believe it or not, and it's actually been holding in tight. Now here you come again. I don't know if you're going to get another pocket pivot off of the 10-day moving average here, but you're seeing that. So this stock not acting too badly. You can see on a weekly chart here that you picked up volume last week and you closed mid-bar, or mid-range. I'm picking up your term, Dr. K. Mid-range there, and looks like you got some support there. And then this week here, I believe I got to check this real quick. Give me 1 second here. You closed, let's see, how far off the lows? Yeah, 41.29% off the lows. That's sufficient to qualify as a supporting day, and I think that's probably constructive as this thing builds a base. And now you see it's trying to come out. You might get some overhead and see it plunk right back into, or rather, shall I say, splunk right back into the 10-day moving average from here. But I think it's stock to keep on your watch list because it's acting pretty well in this environment. If we turn and get a follow-through day, that might be one name to go after. So I know Tesla is one that shows up on everybody's list, but all I see this doing right now is kind of chopping around. So it's tradable, I think, and it pulls in. And if you're watching it on this 620 chart, this world famous now 620 chart, since everybody seems to be talking about it on the website or on the chat room, the website chat room. You can see here the stock's chopping around in the morning. You open here 6:30 my time, so you're opening up here. You can see where the volume starts to trade, and then it turns to get a 620 buy signal just below 103.50. So you could theoretically come in and jump on the stock there, and you'd be making a couple of bucks. I don't know. You're probably selling it somewhere up in here eventually. I don't know if this thing's necessarily going to break out. I would want to see some sort of a pocket pivot. We thought we were going to get it a few days ago last week. Right here, it didn't happen. Didn't trade enough volume. Just barely missed it, and it was actually I think it was this day here. Yeah, and so we didn't see that. But the stock, if you look at it on a weekly chart, it's just kind of building a little base here, and that's really all it's doing. There's nothing fancy, nothing nothing negative. And for all the talk of how overvalued it is, it doesn't seem to want to let go and blow apart to the downside. So it's clear to me that this is not simply a short squeeze. There's something else going on here, and the stock's busy building a base. That's what it looks like to me. First week down is here, and so now you're in a 1, 2, 3, 4, and count this, I guess, as the first week. So you're in a 5-week base now, or say a 4.5-week base since we are in midweek, and you're going sideways. And maybe you come back down to test the 10-week moving average at some point. But I think, I love Tesla, and I think it's a stock that you have to keep on your watch list because I think it is a leader. And even though the market's getting pummeled, Tesla's actually holding up pretty well. I believe it is a mere, let's see here, it's a mere 8% off of its high. So for a stock during a correction, that's really not too bad. So, I think that's one you got to keep on your list. I noticed something, another one, SunPower. Here you have a low and a pullback. So you pull back here. The low here is 1777, and you undercut that low here, and then you go back to the upside. Now, I got to check the volume on this intraday. Right now you're trading, it looks like you're 30% below average right now. So, I'd like to see some heavy volume in here because what you would get here, if you're using a 1777 low, I do a shakeout plus 2. Maybe you could do a shakeout plus 1.5 points, somewhere around there, but maybe a shakeout plus 2 to be safe. And now what you're seeing is you're up 20, so 1777 plus 2 points would be 1977. You're clearing that now. So it's almost like you're getting a little double bottom in here. And you'd have to say this is looking like it might be trying to set up. Maybe you get a pullback in here, but some of the solar stocks have shown some constructive action. You had a little weird, I believe, let's see if we got a 1, 2, 3, 4, 5, 1, 2, 3, 4, 5. No, Solar City just missed the pocket pivot coming off of its 50-day. But, this thing's rounding out a base, so I think I would keep an eye on it as something potentially to come into looking for, say, a pocket pivot off of the 10-day moving average. Just when everybody hates these things, this thing had a sharp run up, now you're pulling back. You could set up again and head back to the high. So I think you want to be open to that and just be watching that as it occurs. So let's see, anything else? I talked about Away. Angie's List, another stock that I caught my a couple of weeks ago when you had a pocket pivot, and then you had another pocket pivot on Friday off the 10-day. Now it's kind of pulling back and going tight sideways in what's really a real funky market environment. So it's actually doing okay. It's not really blowing apart with the market, and it's holding tight. I know there's a pretty heavy short interest in the stock, so everybody seems to hate this one, but it's been hanging in there. It's doing okay. So that's another one that has been on my watch list. So anyways, you can see the market picking up. On the short side, looking at some stocks, let's go back up here. Let's take a look. I'm watching some of these rallies here. You look at Celgene, for example. You had a nice breakdown here off the 50-day, but you undercut this 111.50 low on Monday, so that's a cover point. It rallies back up. Now you're coming back up into and towards the 50-day moving average. You're above the 10-day now and the 20-day, so maybe it gets all the way up in here, but that's not very far from here, so you keep an eye on that one. The other thing here is that you could be trying to build a new base, so that's a potentiality as well. So I think you got to keep an eye on these things as they're rallying, because they could become shortable, but they might also just be building new bases, and I think you have to be sort of open-minded about this. So let's see. Don't see any questions yet, so I'm just going to keep babbling here. Let's see. LinkedIn's another one. You're seeing the 3-day rally now. It's a wedging rally. Volume is not really that impressive, but coming back to the upside, just poking its head up above the 50-day moving average. There's not really much in the volume side of this right now, so maybe this rolls over and fails. I mean, one way to approach these, and I'll watch these on an intraday chart using the 620. So if we pull up LinkedIn, you can see you got a sell signal here. It's not really breaking down. I think that's going to depend on whether the market blows or not, and that's really the question. Celgene's another one. It's on the verge of giving a sell signal here, possibly. So I'll come in, and as we're rallying, and this is in conjunction with the market rallying up towards the 50-day moving average. As we move up, it's just turning blue now. So the NASDAQ is higher than where it gapped up to this morning. But as we're rallying up here, you watch these stocks, and you can test shorts as they're coming up. Let's see, where'd that chart go? And if you get a 620 sell signal, you can test a short out on that basis. And if it turns around and goes higher and it stops you out, then you're done with that. So it's just one way to test shorts coming as stocks are rallying into logical areas of resistance, and it's one way to put them out using that as your signal. Of course, if it doesn't hold in it and you see the cross back to the upside, then you would simply cover and go back to square one. So far, though, it looks like Celgene is trying to break. I did put out a little bit of this just a little while ago on the MACD cross here. And there's various ways you can test it. I like to get a little bit of a jump if it looks like it's coming up into an area of resistance. I'll get back to Celgene here. You're coming into some overhead right here, so this is a logical point. I don't know if it can get to the 50-day. That's probably going to depend on the market, so it may run into resistance here and then head back to the lows. I don't know, but that's how I'm going to play it, so I'll put out a little here and see what happens. Let's see, some other stocks we're looking at. CF is one that is blown apart, but I think this one needs to rally back up. That's one I've had on my list. And a lot of these do seem to be more tactical than strategic right now. I think once we get a rally, if we get a rally and the market fails, then I think you could be looking at the short side more aggressively as we roll over. And that's what I would seek to do probably. Microcores looking like a late-stage base failure. If you draw a line across here, you had a breakout, now you failed. You blew through the 50-day, you rallied back up through the 50-day, off of the 200-day here on a bounce, and about average volume, but it's enough to carry the stock higher above the 50-day. Now I think you got to watch this one because this could run out of gas and blow apart. But I think it's going to have to coincide with the general market breakdown, and that's what you're going to have to see here. So you can see we're still rallying, but it makes complete sense to me that we would be rallying, and you could continue to rally. So as you're testing the short side, you kind of got to be willing to put them out, and if they don't work, you go away and come back tomorrow. And so I'll do that. But at the same time, I think you can look at some long situations in terms of some of these trades if you've got stocks coming into logical areas of support. 3D Systems is another one that's looking like a base failure, but you broke down through the 50-day. Now you're bouncing up. You're up to the 10-day. If this thing runs out of gas here, it could roll over. It's sort of unclear to me right now. I do think the basis up here looks kind of weak. You don't have a lot of tight closes. It's getting a little bit loose, so I think that's something that you have to keep an eye on in terms of potentially failing. So again, it gets back to not really having a rigid view of the market one way or the other. So, I don't know if we're buy, sell, or neutral or whatever on the market direction model. I think from a practical standpoint, as a trader, I'm looking for setups either way as they're occurring. And so, I think you knew by the weekend that you're getting to a point where an oversold bounce would be likely. How far that carries is another story altogether. And it also could have turned out on Monday that we just blow to pieces and the whole thing heads lower. So that's, that was a possibility as well. So I think you're just sort of, in terms of a general trend, you're in no man's land, but there are areas to be playing the market. So let's see, what else am I looking at here? I'll go through my little handy-dandy list here. Cree was one, this was a bounce off of that. You went through the 50-day, but you bounced off the 65-day exponential here, and boom, you're coming back up. I don't know if this is going to make it. I'd almost be inclined to just short this move and see if it holds up, but that's a little bit tricky. But the stock is plowing higher, and most of these stocks are being right back up towards their highs. FleetCor is another one that I was looking at over the weekend, holding the 50-day, but notice here you come down to the 65-day exponential and you're bouncing, but you're not getting a lot of volume, so this could fail as well. But this is a good example of a stock. Here's I think a pocket pivot in here somewhere along in here, maybe right here. Is that where that occurred? Where do we see this one, Dr. K? I forget. Maybe it was this day right here. No, not that day. I forget. Maybe it was this breakout here. No, not there. Maybe it was here. Yeah, right there. That's it. We saw pocket pivot support.
Yeah.
Support moving off. Yeah. And then the stock moves up, and it's actually, it's going pretty tight, and all of a sudden, kaboom, they hit it. And I think that points out some of the danger of this market. I notice a lot of people in the chat room are talking about, round-tripping stocks and buying stocks, watching them go higher, and then watching them blow up again and come right back down. And it's, I guess in a sense, this is a round trip. Here's a buyable gap up here. You could have bought it, and it moved higher, and then boom, you're back to where you started here. And, what do you do? I think in most cases, my approach on the long side is I don't want to lose money. So as soon as something starts coming down to where I bought it, or I'm down a percent or two, I'm just gone. I don't mess around with it because I think in this market there's potential for vacuums to be created under the market, and I think you saw some of that last week, and that just creates more risk. So you're in a position where I think risk is ever present, and probably more so. And I think this breakdown really shows you. You could just be whistling a happy tune here, and some of your stocks are looking good, and all of a sudden, bam, they just clock you. And I think that's the nature of this market. So it's something you just have to live with and adjust to it. And the way I've adjusted to it is by approaching the market not as a stock market, but as a market of stocks, and looking at trades on both sides of the market at different times. And also, as I'd like to say on the chat room, I'm trading the trader. So when everybody gets scared and it looks like things are going to blow apart, you might be looking to trade stocks coming off the logical areas of support. And I think we saw that so far, or we've seen that rather so far this week. On the other hand, I don't think you're starting any new hot trends, so you're trading, and it's mostly day trading. And if you're not oriented towards that, and I know that some people in the chat room have mentioned that they have trouble with that, then don't do it. Stay in cash, like Dr. K says, be in cash and just hang out, because at some point a real trend, a very nice trend, is going to develop to the upside, to the downside. We'll find out soon enough. I tend to think we're going to go through the lows, the Monday lows eventually, just because everybody seems to be pretty complacent about all of this, and I don't necessarily know that you can. I mean, the whole theory here is that the market got it wrong last week, that the Fed is not, from a practical standpoint, going to be stopping with QE. They're just babbling about it, and that was enough to spook the markets, and I think spark some very heavy selling, and selling that I think is different than any that we've seen so far in 2013, and I think that's something you have to pay attention to, and just not be complacent and be quick. You have to be somewhat nimble. And if you do go long stocks and you see them coming right back to where you bought them, I wouldn't give them too much room, because you could be facing some trouble. So let's see, my briefing.com sister of Siri, as I call her, just talking about SSYS. Let's pull that one up real quick. I don't know what's going on. See, here's a late-stage base failure potentially as well. You had a breakout from a cup formation, and to me this is too sloppy to be a playable handle or a constructive handle. And now you're back below the 50-day and you're bumping up right into it. Does this thing go lower? I was trying to short this thing the other day and I couldn't get a borrow on it. I wish I had, because you got a nice 5-6 point move to the downside. 3D Systems, another one to keep in. We were looking at that earlier, and that's another one in the group. This XONE, I don't know what's up with this thing. Whoops. Yeah, zone, but that's about right. Hello. XONE, there we go. This thing's making new highs. I give up. I can't understand this stock. It's just wild V-shaped moves and continuing new highs, even though of all of the 3D stocks, it has the worst earnings profile. So go figure. Anyways, let's see here. I'm going to answer some questions here now that I've babbled for about 20 minutes or so. Somebody asked, should we keep an eye out on the indices as they approach up to their 50-day moving averages? Would most traders be looking at shorting opportunities around this event? I think I answered that question in my babble session right now as to what I'm looking for, and the answer, of course, is yes. And you have to watch how some of these stocks act as they come up into logical areas of resistance. Data, somebody asked about, which is the same group as Splunk. Yeah, it's a much thinner stock. I mean, it doesn't even have average daily volume yet, but it looks to me like it trades somewhere around 400,000 or 500,000 a day so far on average. So it's pretty thin, but that's another stock that's been acting okay, and it's in the same group as Splunk, so it looks not too bad. Here's a question for you, Dr. K. Are you ready for this?
Yeah.
Okay, Dr. K, why do your methods, MDM, Pocket Pivot, Bible Gap Up, rely so heavily upon the significance of daily volume when by some accounts machines account for 75% of daily volume? How is daily volume an indicator of a trend when machines, unlike institutions, do not steadily buy shares in the stock over time?
Well, it's all a good point, and they also have talked about a number of these automated systems. They've also talked about dark pools that affect trading volumes. But my answer is that as long as these continue to provide a favorable risk-reward profile for the stocks that we're considering, then I will continue to use this method. So far, it seems that dark pools and these other situations that are more automated are affecting more heavily a lot of day traders over the last few years, especially since 2009. And these day traders are finding that they sink or swim. They got to revise their strategies, otherwise they become non-profitable. But in terms of the longer-term perspective of day-to-day price volume action, it still seems to prove out. That said, in a trendless environment like we saw in 2012, where we're not getting too, where trends are scant at best, trend followers obviously are not going to be doing very well. And we saw that the trend-following wizards collectively were down, many of them down double-digit percentages in 2012. But that speaks to the nature of a trendless environment, not to the nature of machines that are trading 75% of the volume.
Right, and I would say that if you start to observe that pocket pivots or Bible gap ups don't work and the volume fakes you out, we haven't observed that to be the case at all. There have been a number of very good pocket pivots and Bible gap ups that have been very profitable. And if you've been in them, such as Tesla, there's a Bible gap up day right there and big volume. So are we supposed to ignore that because we're overthinking that maybe some black box machine or something is pushing the stock higher? I think you would be a fool to do that. So so I would say why do we need to overthink it? In general, you see that the rules regarding volume on strong upside moves hold for the most part, and there are profitable moves that can be played based on the volume, the price and the volume. And when you see heavy volume on a Bible gap up or the correct volume signature for a pocket pivot, those work. So if you want to overthink the market, go ahead. But as far as I'm concerned, you're just making things a lot more difficult for you. Somebody asked me, I get this question all the time.
It actually comes back to keeping it simple. Keeping it simple but no simpler. That's what Einstein always said. And
right, exactly.
With trading, it's infinitely unreliable to stack up all these indicators and make it overly complicated. And the best systems generally are going to be a lot simpler. And Ed Seykota talked about that with the Donchian lines and the moving averages and just very simple trading methods that have worked very well over time. There's better ways to trade than those very simple methods, but if someone didn't have really much time to follow a market, that longer term approach would still be acceptable even in today's markets.
Yeah. Somebody asked, what's a tactical short versus a strategic short? To me, a tactical short is in early stages of a market rolling over in a short-term correction where you're coming after something. Example here would be the failure here on the selling going through the 50-day. Now you run up to the 50-day, boom, and you undercut this low, and you're basically trading from here to here. That's a tactical short sale. When you start to get a big breakdown from a major topping pattern, then I think that's when you see things more as being strategic. So with Apple, here is the breakdown from the big head and shoulders here. There's the left shoulder, the head, and the right shoulder here. And once you break down, that thing's just in a downtrend. And you could have just shorted it there, and for the most part, stayed short. And really, you could still be short the stock because it isn't that far above this 385.10 low here, and it looks to me like that's where it's headed. And I still think you're going to see Apple go a lot lower. I know Apple fans don't want to believe that, but I do think that they're sort of losing their grip a little bit, it seems like. At least that's been my experience. I know I went off last week, I think, on the new iTunes, which I don't understand what happened to all the music I bought. It used to be under, you clicked on purchase music and you would be able to see a list of all of it. Now I can't figure out where that is. So if anybody wants to email me and explain all that to me, I'd appreciate it. Somebody asked, Gil, can you provide some tips on screening for short sale candidates? Well, my list of short sale candidates is basically, it comes from my list of prior leaders. So what I'm looking at is leading stocks start to break down. So for example, Apple was on my buy list, all the way up through here, but once it violates the 50-day moving average or fails from this little flag formation and you're coming down on heavy volume, that gets put on my short sale list. So the way I don't really screen for them. On a daily basis, I guess the only thing I do to screen for them on a practical basis is I'm looking for stocks down on volume, and if they happen to be stocks that are big leaders breaking down off the peak on huge volume. For those of you who've been on the chat room, right around in here a couple weeks ago, I was mentioning Allergan as a short because it's got this whole lean-to type of thing. But once the stock does this off the peak and it breaks down hard, it goes on my short sale watch list, and then it's just a matter of watching all of these stocks and seeing what they do. So I don't really screen for them per se, because leading stocks, when they do top and break down, they will form the requisite patterns, and then you can just work it from there. So somebody says, wouldn't Monday possibly qualify as a day one of a rally attempt because of the midway close? No, not at all. And in fact, a mid-bar close is actually not a strong close at all. Why wouldn't you say then that, since this closed higher up in the range on Friday, why wouldn't that be the first day of a rally attempt? You need to see the stock close near the peak of the day, and generally you want to see it up on the day. As far as I'm concerned, you're overthinking this and trying to create a first day of a rally attempt when maybe one doesn't exist. So, what is that noise, Dr. K? Are you drinking some of that wine you bought at the auction the other day?
Yeah, it's quite crunchy.
Yeah, it sounds like it. So, anyways, I don't know. Dr. K was telling me earlier he's buying some $1,000 a bottle wines at like $30 or $40 a bottle at an auction. So it sounds like a good deal to me. But in any case, let's move along here. So no, that's our answer to that. I wouldn't. But again, does it really matter if you're playing it more as a market of stocks and not focusing so much on, do we have a follow-through day? Do we not have a follow-through day? My guess is if you have a follow-through day, by that time you're going to have rallied 5 or 6 days on no volume. So you're probably better off just watching stocks. Let's see. Wait, we already answered that question. Workday, WGAY. I hate this stock. I just want to say that. So it's very volatile and it's all over the place. You can see the wide daily ranges and trying to come up, off of the 50-day moving average here. I don't know. Am I going to buy this stock? No, because look at how erratic it is. It's just very hard to handle. If you catch it
routinely.
Yeah, and if you catch it on a move up, maybe it's a good trader. But other than that, to me, it's a piece of garbage, and I don't mess with it. But let's see. SRPT, is this a buy or avoid because of biotech correcting? Isn't that Sarepta Pharma? Is it a buy? I don't know on what basis it would be a buy. I guess if this is a buyable gap up here, you can see it closed lower than where it opened up on that day and then came right back in. So.
But they had that gap down in April, so I wouldn't touch it. It's a
long base, and it looks okay, but it's a funky stock, so I don't know. I don't see it as a buy right now per se. So that's just my feeling on that. Should we include UVXY as a trading opportunity, or is it best as a hedge? I've scalped it for sushi money. I don't know. I think it's a nice day trading vehicle. You can go back. Let's take a look at it on the old 620 chart, and if you go back to like last Wednesday, what was last Wednesday's date? 6 what? 6
19.
19. So we'll go all the way back there. Let's see. And yeah, that was a crazy day because you started, and then you got a buy signal here, a nice big buy signal. And the thing took off, and you would have gone from, say, 65 and change up to 68, 69, well, about 69. So that would have been a nice day trade. And then you come in the next day, and it just continues higher. And here you get another buy signal here after this occurs. This actually occurs during the market hours. This is all pre-market, so you couldn't really act on this. But if you waited during the day and you saw this buy signal, yeah, you could have bought it around 76. And run it up to 88, and before you're stopped out, it's 84. So, again, you go back to this would have been 621. Was this Friday? I believe so. You would have had right at the open, you would have had a buy signal, and so this is a nice day trading vehicle. So, I think it can work as a vehicle to be long when the market's looking like it's having some problems. So yeah, I'll say it can work. So I like to trade it myself. If I'm long some things, I'll throw it out. Sometimes I'll buy it. If I'm unsure, like on Wednesday when the market was all over the place, you throw out a little position there just to hedge your longs. If you can be nimble on that. So Thoughts on INVN? Uh, well, let's see. Symbol starts with an I, ends with an N. It's kind of a cool name. InvenSense. Stuart Barney was sort of intrigued by it when I mentioned it, I think last Monday. But those are my thoughts. If you're asking for thoughts, if you want me to evaluate this in terms of its technicals, you got a Bible gap up, and if you understand Bible gap ups, then you can see that you violated the low of this, and even if you gave it some porosity of a couple to 3%, you're below that, so that's a sell signal pretty quick there. And this one hasn't recovered, so am I going to come in and jump in and buy it here? If you feel like you're a nimble trader and you think that it is trying to turn, then maybe you could revert to your 620 chart and see if you want to buy it trying to come up and around on a 620 buy signal. You know, a lot of stocks, when they get down and dirty, have been able to rally, but this one has not. So there has been some talk that they may not get Apple as a customer this year, and I think a lot of the upside in this is probably predicated on that. I couldn't tell you because I don't really know the nuts and bolts of the whole story, but I do think that once you violate on the Bible gap up, then you kind of have to back off and wait for another buy signal. If you're trying to bottom fish here, and hopefully you get a nice bounce back up like you've seen with some other stocks, well, you could use the 620 chart to get you going in the right direction, theoretically. But, of course, if you had used it this morning here, you would have been stopped out, and now you're looking to come back in. So it's not like it's so black and white and so simple. So that's the scoop on InvenSense.
We had a question on Jive and two stocks, Jive and CHUY. Yeah, I mean, Jive is kind of a bottom feeder. It's not performing very well. The last quarter's earnings was negative, 15 cents, and it's a bit on the thin side, so I wouldn't touch this one. There's much better names. And as far as CHUY, Chewy, that's doing a lot better. In the face of this downtrending market, it's managed to hold its own. It has not violated even the 10-day moving average. Earnings are accelerating wildly, and institutional sponsorship has increased since this company went public. So 3 quarters in a row. The industry group strength is 15, and you know, I like this. If you got a position in it, you might as well sit and maybe use the 7-week rule if you're daring to gauge your selling on this day.
Hey, you're saying it hasn't violated the 10-day line, but didn't it do it right here? Right
oh no, back since the move above 35.
Okay,
yeah.
Okay, I don't want to clarify that for everybody. Yeah,
Thanks.
It trades 102,920 shares a day, so for my blood, it's extremely thin. But I guess if you're buying a couple hundred shares, it's acting okay, so not too badly. And you guys on the chat room, you know I like big stocks if I'm going to mess with stuff. Dr. K, which ETFs do you own? How much are you invested? Why? What will make you change? I'm just going to say that we're not here to divulge our positions and specifically what we're doing. If it comes in conversation about a stock, we'll mention that we have a position if it's relevant to the conversation. But I just want to point out we're not here to provide you guys with our positions in real time at any point in time, because it's not useful information, because the situation could change very rapidly within the next 20 minutes. And so we start babbling about that and divulging our positions on demand. I think we could end up misleading some people, because then it leads to the question, well, why do you own that? And what are you doing? And 10 minutes later, it could be gone. So I don't think that's a useful question to ask. So
yeah, the worst thing I remember back in the day is, I admired this one trader back in the mid 90s, and I caught wind of one stock he had bought, and I tracked it because I didn't buy it, but I did track it because I was infinitely curious and assumed it would go up. It didn't, and it's kind of a lesson that even though it didn't go much higher, he still made money on it because his time frame was so short, and I wouldn't have gotten out at the same time. So everyone's got their risk profile and time frames.
I thought I'd point out LinkedIn. You can see it's starting to roll over. Coming in now. So the market had a big jack to the upside, and it's starting to roll over. This might work. We'll see what happens. I am short some of that, up around the 180 area and change. So is it too late to short Apple? Well, I think so. There's no discernible short point. So my feeling was you had to be shorting, and I think I talked about this last week in the webinar, the week before, that now that you've violated the 50-day moving average and you're living below the moving average, this is where you could have shorted it using the moving average as your stop, maybe another 2 or 3% to the upside. But at this point, it could continue going lower. I'd expect, though, that you're heading for this low here at 385.10. So I think you're heading there. Whether you rally one, say, up into the 10-day moving average, I would look at resistance now as being this low. So this is right around 420. If you got some kind of rally up there, you know, in a crazy market rally, maybe it would be shortable there. But why bother with Apple now if you didn't short it around the 50-day when there are other stocks that are rallying into logical areas of resistance, like LinkedIn, like, you know, I'll tell you another one I think is interesting as a short potentially, and I'm looking sort of as a left shoulder ahead, and now you're forming the peak of a right shoulder. And I do have some of this short right now. It's First Solar. So you got up to this area of resistance at the peak of this little inverted bear flag, and I'm wondering if this thing's going to roll over. So in general, I think the solars, you know, they live on the promise of subsidies, I suppose, but I don't know if First Solar is going to make it through with this secondary they did, and it's acting to me like it might want to roll over. We'll see how this pans out by the end of the day. Somebody says small caps are not participating as much as big caps. Utilities are leading. Signs of a top. Well, you know, I don't know if you. Why do you need to speculate about signs of a top? Because here's your top. I mean, it looks to me like the market topped. So at this point, I'm not really speculating about signs of a top. As far as I'm concerned, the market did top. And you're in a correction, and now you're in an oversold bounce, and now I'm looking at this, whether is this going to develop into a viable situation where you get a follow-through day, and it's happy days are here again, you know, with stocks breaking out and whatnot, and that's really where I'm at. I'm not here trying to speculate whether, you know, small caps not participating and utilities leading, and, you know, the moon in the 7th house and Jupiter aligned with Mars, whether that has anything to do with the price of tea in China or a market top. So all I'm looking at here is you're in a correction. End of story. The question now is whether you're going to rally and set up in a follow-through there, or whether this is just going to be a natural reaction rally that takes you up to the 50-day moving average, maybe not even that far, before you start to roll over and you see these stocks that are jacking up into logical areas of resistance, and which are also on my short sale watch list, you know, whether you're going to short them. That's how I look at it. So you've seen small banks strong, and you've seen stocks like Wells Fargo, you know, here it is gapping up and trying to break out. Goldman Sachs, however, is not. Morgan Stanley is not. I think you had MTB as another one that's trying to come back, and you got a gap up move. I'm not sure what's driving that, but generally these aren't stocks I would buy anyway, so it's not a big deal for me. Triple D, I think we covered that already, so I'm looking at that. You got to bounce off the 50-day, but if this thing goes through the 50-day, which I think it could, this rally up into the 10-day moving average. Whoops, you know what? I went and did this again. I always do that. We got to look at this chart. DDD. And I have to admit I have a little bit of this short as well, because coming up to the 10-day moving average earlier, so it's kind of failing. Volume is weak on a 3-day bounce, and this could roll over. So, you know, like I said, I don't like this base. Earlier I pointed out this base is kind of choppy, so it looks like it could be something from which the stock would fail. And so I think you have to be cognizant of that if you're trying to buy the stock. I thought you could have bought it here for a nice trade and get a couple of bucks out of that, but, you know, that's a day trader's thing, and if you're successful, you know, more power to you. But I think you're running into some resistance here, and you're potentially setting up in a sort of a pod type situation that could fail. So, you know, I'll look at this one either way. I'm not right now. I'm looking at it as being a short sale target because the market is right now in a downtrend. If that shifts and we see things change, well, then I'll adjust to that, and maybe this breaks out. But it doesn't look like it wants to. It looks like it's not quite right. That's what it looks like to me. So. SWHC, Smith & Wesson, I was looking at this the other night. You know, you had a viable gap up here, but it's not really holding, so I don't really see that this is a good pattern. You got a lot of heavy red volume on the left side of the pattern and nothing really going on here, so not a stock I'm interested in buying. But here's a Bible gap up, so whoever's asking that question, you're right on that. And so you do have a Bible gap up here, but it's not really holding, and it's not, the base isn't right as far as I'm concerned. You agree on that one, Dr. K?
Yeah, I mean this. It doesn't have the right characteristics, and especially this challenging market environment. It's not doesn't look like it's really going anywhere.
Yeah. Let's see. Away, MEI, and well, I already talked about this when you had a pocket pivot yesterday. You're going to get some resistance on the left side of the pattern, so it wouldn't surprise me if you saw it push right back in. Let's see. RH, someone's well, that had a Bible gap up. It's still holding up, so it hasn't violated it. So there's nothing really there to stay. MEI. This is Methode Electronics, kind of a cheap stock. I don't know. I guess you had a pocket pivot right here. It's a little V-shaped, but it's not really a name that we've been looking at. It's kind of thin, 247,000 shares a day, so a little bit too thin for my blood, frankly. Somebody asked.
I would trade. Chewy's a better. CHEY is it's acting better, even though it's also a thin name.
Somebody says GDD had a buy on the 620 chart. It did, and then immediately it was negated. But like I said, I think you have to look at this in context of what's going on with the general pattern. So you look at the daily chart, and to me, I'm not necessarily looking at 620 buys here. I'd be looking for a 620 buy off of an area of support. As you're coming up in here, you're running into overhead and resistance at the 10-day line. So to me, in a contextual frame of reference here, you're not using the 620 to buy at areas of resistance. You're using a 620 chart to buy on intraday turns off of areas of support. So back on Monday, you saw the stock trying to hold the 50-day moving average, and if you saw it, if I'm looking at it, I'm looking at undercutting Friday's low and turning. If I saw it turn there, and let's go back, let's look at this 620 again. That would have been on Friday, I think. Okay, so if I'm seeing it, and is this Friday? Yeah, if I'm seeing it come down in the morning, and this is your turn here, that's really where you want to use it, because it's coinciding down at the 42 and change level. It's coinciding with the moving averages here, and I use both of these, to give me a rough area of support, because I've noticed that these stocks, they don't hold the 50-day moving. They'll violate the 50-day moving and then turn around and go back up. This market's so screwy that a lot of the rules, you kind of have to give yourself a little bit of leeway, I think, and operate more in a little bit of a frame of mind where you're using several different contextual indicators. So, using the 65-day exponential, the 50-day simple, I get an idea of where you might find support. You're also undercutting this low. So it sets up a logical area for a rally, and then I'm looking on this day, I'm looking for a turn in the stock if I get it. I wouldn't be looking for it here. So, that's one of the reasons I hate to talk about things like the 620 chart, because everybody wants to approach everything in a mechanical way. Black and white, black versus white, night versus day, mainly because they just can't think, they can't get their brain to think in terms of contextual patterns and using judgment and looking at where you are on the pattern and what you're using. The 620 chart I developed originally to help me cover shorts when I'm covering, and I've explained this before, where I'm using it on, say, a Celgene coming down, undercutting this low, and at the same time as it's undercutting this low, then let's go back. That was on Monday, right? Yeah. Let's go back and look at how I would use the 620 chart. So let's pretend it's Monday, okay? What was Monday? 24th, yeah. And early in the day, here's the opening right here at 6:30, right in here. You can see the volume start to trade. And it undercuts that 111.50 low in the morning very quickly, and then you get a 620 buy, boom, cover the position. That's how I would use it. And I would use it the same way on the long side, when stocks are pulling back into logical areas where they might rally. So I hope that makes sense, and I hope that emphasizes the way that I use this contextually with where a stock is trading on its daily chart. It's just not some magic thing you use every single day, willy-nilly, like some mindless monkey. Okay, you gotta think a little bit. Use your brain. You have one. Even though you may think you don't, you do. Illumina, pulling back. You had sort of a, this was a pocket pivot? No, it missed. This here, though, is a pocket pivot, and you might say it's a trend line breakout here, but it's acting okay, so that stock doesn't do too badly. You can't buy it now. It's a little extended, I think. I think you might watch it pull back in. Dr. K, are you actively trading ETFs right now? Any insight to your preferred ETFs would be appreciated. What are your preferred ETFs, Dr. K?
Well, right now the model's in cash, the market direction model, and I'm trading. I'm trading lightly in this environment because I think like we discussed earlier, we might be in for a bit of volatility, and I'm not going to get into size until I see more of a discernible direction one way or the other. I do have a position in the XIV simply because the UVXY model is on a sell signal, and XIV is the inverse to that. So, but again, I'm measuring everything carefully because we're not clear on which way the market's going to go from here. Interesting sound effects.
Yeah, that's my new Office 365 system that we're using now internally.
Oh, nice.
So makes a nice chime. Bloomin' Brands, I don't know, it's way up there. So what am I supposed to tell you here? Sell it? I don't know. It's holding up, so couldn't really tell you. Let's see. NXST, Nexstar. We're going to have to wrap up here pretty soon. You got a pocket pivot coming off of the 10-day here and the stock moving higher, so I don't really see anything that needs to be done here. Stock's just in an uptrend, so it looks fine. Somebody asked on Chewy, is a 10-day buy if it closes below yesterday's close? I would think so. Is that right, Dr. K?
It did not. Well, if it violates, if it closes below yesterday's close, then you could interpret it as a violation, but you could also say give it a little bit more room. In some cases, you could say give it as much room as going below the lows on June 21st. Mm-hmm. That low would be 37.5.
Okay.
But it all depends on what the market is serving up here. So we're the market's looking still very tenuous, so I would be keeping my stops tight, and therefore I would utilize yesterday's low as my exit point if I wanted to use the 10-day violation.
Dr. K, in 2010 and 2011, the Nasdaq had 18% and 20% corrections. What caused those big corrections? Do you see correlations with today? I would say the corrections were caused by a lot more people selling than buying, but they do correlate with the Fed backing down on QE. At during those periods, so that's my take on it. So correlation.
QE was drying up, in causing partly causing the flash crash of 2010, and then you saw the correction in 2011 take hold in August, and again that was because QE2 was pretty much at an end, and therefore the existing correction should probably be kept to more of a minimum, and that's why if the market just starts to go higher after a bit of volatility, I would not be surprised simply because QE3 is firing on all cylinders.
BGU on TRN, let's see. No, that can't be a viable gap up. Stock's in a downtrend. So you need to read our book. I can't believe somebody asked me if somebody actually would ask us if that's a viable gap up. You don't understand viable gap up. So I suggest you go to the website and search on those questions. What is a viable gap up? A viable gap up has to be occurring out of a base, not that's almost a shortable gap up. An SGU, so you gap up right into resistance. To me, this pattern looks like it's almost more of a short than anything. So You know, that's what that looks like. So it can't be a Bible gap, but you really need to on the daily chart. No, not even close. Dr. K, why is the market direction model in cash? Is it leaning towards a buy signal or a sell signal? What will cause the change? Shane, you got a lot of good questions today on this.
Yeah,
You
no,
know,
if
we need a crystal ball to answer these questions.
you know, if the market starts to drift higher and the leaders start to follow along, I mean, that would move it into a buy signal. On the other hand, if it were to reaccelerate its selling and leaders accompanied by breaking down leaders, then that's probably likely to push it into a sell signal. It's really predicated on price volume action of major indices and leading stocks.
Right, right. Somebody says, I thought there were no pocket pivots for Illumina for the month of June. Well, Maverick, since I know that's who you are in the chat room, you asked that question 3 days ago when the stock was sitting here and there were no pocket pivots in the pattern. You might call this a pocket pivot breakout, but it is not a pocket pivot because it's extended from the 10 days. So it is a true fact that there have been no pocket pivots in June. But you are seeing the stock break out on a pocket pivot volume signature, but you're not seeing it break out on big volume. So I hope that clarifies that. How are the pizza and donut indexes doing? My favorite stock, Krispy Kreme Donuts, is trying to come up. That's in a nice little flag pattern, so it's acting okay. Just kind of hanging out, nothing there. What's the other one, Dr. K? We like Dunkin' Donuts, right? Dunkin' Donuts, you know, being right back to a new closing high if it holds that. Let's see. What else we got going on here? Jack in the Box is looking pretty good there. McDonald's, not so good, but let's see, pizza. Let's look at pizza stocks. Pizza trying to hold up. So I guess cheap food is holding up and junk food is holding up. So that's a good thing. I'm looking at some of these stocks. I notice Fizzler is fizzling, as we used to call it, and so I'm thinking this is a short little head and shoulders pattern. We'll see if I'm right. If it goes to the high today, I'm probably gone. Let's see, LinkedIn also is coming in a little bit, stalling out, but 179.50 right now, off the highs above 180. Let's see, Celgene is kind of backing off a little bit on the 620. I think that looks a little better. Gotta go all the way back here. Yeah, you can see now it's confirming the breakdown on the 620 chart. Maybe that's shortable here. I think it's pretty low risk because what's your risk A is like 120.81 on the upside. Okay. Dr. K. Oh, I like this question. Please come to the chat room more often. Yes, everybody wants to speak with the great and powerful Dr. K.
Yeah, the chat room's fun. It definitely can be addictive.
He'll be there.
I'll generally be. I mean, sometimes I'll just quietly come in, and then my attention's diverted literally within 60 seconds. So if you see that happening, that means I've been diverted. But the idea is, I'll pop in for 5 or 10 minutes, maybe a little longer, depending on what kind of questions are being thrown around. And as far as the timing of it, it really varies because my schedule is not set. So it's kind of when it's very organic as to when I'll appear.
I haven't been on today, but I usually come in and hang out for a couple of hours actually, and just kind of sit there and see if anything comes up. I'd like to see more people get on the chat room. There's actually some good discussions that go on. I think some of you people who don't understand some of the concepts as well, because you don't have enough experience with them, could find that they are useful in terms of helping you figure things out. So I do recommend it. How far do you think gold can fall before finding some sort of bottom? I think we're going to finish with this question because I think that what you're looking at here is, wait a minute, is this a weekly chart of gold? It is, isn't it? Let's shrink it. The way I look at it is you're coming down, probably the next major area of support, let's bring this down, is here, and that's $1,000 area. You might be coming into some support in here, and that may be where you start to find some support in here. We'll have to see, but you're starting to get into this area, so that's about 1,200, I think, on the futures, and down here is 1,000. So if you get down in here, you possibly could find a low here. I would expect that 1,000 would be an area where you would find some support and then a bounce. That's how low it could go. Somebody says, Gil, when you played Silver and Gold by Burl Ives, it was near the top. Now CNBC is playing it today. Could that be a bottom? Maybe so, JT. I don't know. Somebody says, lots of good comments in the chat room. I've learned a lot from all the experience in the room. Yeah, there's some smart people in there, and I would highly recommend that you check it out. So, and I'm there hanging out usually for an hour or two. Maybe I'm off and on, depending on whether I'm busy or not. And sometimes I just log on and check it from time to time. So if you ask me a question, I don't answer right away. It's just because I'm away, and I'll come back to it. So, anyways, I think that's all we've got. So kind of giving you an idea of what's going on. I'm just watching to see if this rally fails. You can see we're still powering higher. Some of these stocks, though, are not showing as much oomph to the upside as the indexes are. So, but the indexes, I think, can carry. Let's see where we are on the Nasdaq as we polish off this presentation today. Let me fix my charts. We'll get them all back to normal. You go back here. And how about this? He's in the right spot. But you can see, here we are. So we're getting close to this area. I wouldn't be surprised to see us get up that high. It's a possibility. But I think you just watch some of these stocks and how they act. And, it may still be that some of these are shortable as they move up into areas of resistance. And even if the market continues higher, they blow up. So, again, I just treat the market as a market of stocks. And I'm looking at trading long or short depending on what I see at any given time. Or as I like to say in the chat room, it depends on what is where, and that's basically what I'm doing. So anyways, but if you guys want to hang out in the chat room, I'll be there usually every day, and you got questions about what's going on, I'll hopefully give you some insight into how I'm approaching this market. Dr. K, it stays in cash when it's not working the way he wants it to, and with the MDM and a neutral signal, that's where he is. But I'll come in here and trade, being manic the way I am. Anyways, that's all I've got. Dr. K, you have anything to add?
I think we're good over here.
All right, you guys. Hope you enjoyed today's presentation, and we'll catch you next time. Take care. Good luck. And watch for resistance at 3,400 on the NASDAQ. Take care.
So long, everyone.